You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' bit of tunage means it's time once again for the rockinest show in the option space, at least the rockinest bi-weekly show. Of course, the Option Block, your home for all things bi-weekly options. A little bit of education, some analysis, some strategery, and Uncle Mike joins us. A whole bunch of unusual activity, a bunch of what's trading, your questions, a whole bunch of other stuff. Stir it all together, you get the heady brew that is the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hit us up over there on the OptionsInsider.com. If you haven't been there in a while, if you do go every day, ballyhoo to you. Head over twice a day. It's fun. We got a lot of new stuff coming for you. We're always cranking up new, interesting, fun ideas. So stay tuned. Keep your eyes out for those. Of course, you can always follow us on the old social media channels at Options on the main ones, the Twitters and the stock twits, Options Insider on Facebook, and a bunch of other handles and a bunch of other ones, I'm sure. If you use them, you can find us. And, of course, follow us and stream live every Monday and Thursday, 3 p.m. Central. 3 p.m. Central, 4 p.m. Eastern via Mixlr, MIXLR. Grab that link we tweet out, and we're good to go. Speaking of good to go, let's check and see who is good to go on the old All-Star panel today. I do believe we are down one All-Star, Uncle Mike, traveling hither and yon on assignment. Hopefully he's gone somewhere cool. Hopefully not back down to Mexico, because we all know what happened the last time he went down there, and it wasn't pretty. I don't think the authorities will let him back in. Luckily, we have someone who never really leaves his home, except for once in a while when he comes to Chicago. That is the Rock Lobster himself, Mr. Andrew Giovinazzi from theoptionpit.com, beaming in from the homeland of Maine. Mr. Rock Lobster, welcome back to the program. To you as well, sir.
I mean, I appreciate it being the only person here, the only other person here, just like the Rock of Gibraltar. Here I am, day in, day out. Twice a week for an hour. But, you know what I mean.
If the Rock of Gibraltar popped up and then went away and then came back and then went away and then forgot to mute itself and then unmute itself every now and then, that analogy would hold, you truly would be the Rock of Gibraltar, sir. But otherwise, I think a little bit of a difference. But, what do you think?
Instead of the Rock of Lobster?
I can go for that. The Rock of Lobster, they're out there sunning themselves, pre-applying the butter to make themselves scrumptious for when you crack them open and eat them, as I know you Mainers do on a daily basis, morning, noon, and night, correct?
I don't know about morning, noon, and night, but I hear lobster is $7 a pound here right now. It's kind of expensive.
I was going to say, I thought it was like $1.50. I thought you bought it cheaper than gas over there in Maine.
No, I mean, it was $3.35 a pound last summer. Now it's getting up there. I think we're exporting it. That's the problem.
All those export markets. See, all the macroeconomics. It even comes down to lobster at the end of the day. Speaking of lobster, it's time for the Rock Lobster's time to dance in the old spotlight like the aforementioned Rock of Gibraltar. What a tortured analogy that was. So let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what we're watching, what's catching our eye, what was lighting up the old tape today. A lot of stuff going on. some in the markets, some elsewhere in and around the markets. We can get to all of that in a little bit. Most of the major indices, like we said, we are streaming and recording this live here on Monday, the 10th. Hard to believe it's the 10th of July already. 10th of July, you can hit us up on Mixler. If you are around live after the fact, we love you guys too. iTunes, all those fun places. And most of the major indices up slightly at the end of the day here, with the exception of the tech-heavy NASDAQ. That one kind of in rally-ho mode, up about almost 3/4 of a percentage point out there. So tech getting some shine, getting some love. Apple up about 0.75% or so, a little over a handle today. A bunch of the other ones. Amazon up 2% ahead of the big kickoff of Prime Day, which I believe starts in just a few hours, 9 p.m. Eastern, 8 p.m. Central here in the One True time zone. So all you guys looking to get your deals, get your keyboards ready, get your mouse fingers warmed up. A lot of deals coming your way soon. All that green on the screen means VIX cash heading south again. Shy of the 11 handle this time. Ended up the day a little bit shy, right about 1092 or so. Off. Since Sebastian's not here, we can say it off about almost 2.5% on the day, about a little more than 1/4 of a handle. So interesting day out there in the vol space. We'll get to some other names popping off. But before we get to that, Mr. Rock Lobster, what caught your eye in between eschewing lobster in the store because it was too expensive today, sir?
You know what caught my eye today is the rally back for tech. Amazon almost at $1,000 again. Tesla gave it up a little bit. Kind of an up and down day for that. And then the banks finding just a little bit of love. It was kind of a, earnings are coming out in a couple of days because they're already into July, and VIX is barely above, it's barely the 11 handle. So it was kind of one of those sort of slow, but I want to be long days. That's what it felt like. As far as activity, I think there's some interesting activity in the banks. There's there's a little vol for earnings in there. But we'll see how those spiking interest rates can do what they can do for their earnings. Spiky interest rates.
Good spiky stuff. It is funny. Earnings seems like we just got finished with earnings season not that long ago. That's the thing about the season. It just keeps coming back again. A lot of names lining up soon. This next coming week, not the big guns, but shortly thereafter, we will see some of these big names. Let's see. Oh, we already got a Netflix on the horizon, actually, a week from today, the 17th. So we got some names announced, some dates confirmed. Good old Tesla, everyone's favorite, not till the 2nd. So we got a few weeks out until then. But Netflix on the horizon. So the Widowmaker, one of those aforementioned, much loved, much hated, much bemoaned FANG stocks, FAANG, of course, for Apple and Amazon. We also have a Citi on the 14th. So some things coming up on the near-term radar. Last few seasons haven't really conspired to budge the VIX really at all. Nothing really seemed able to move it north of the 9 to 10 handle. It kind of languished in for most of the time. But that said, Mr. Rocklofsky, are you thinking this might be the time? I mean, we've already seen it spike a couple of times north of 11 into the 12, hitting 13, courtesy of our crazy friend over there in North Korea. You think maybe this earnings season will be the one to kick it up a notch? Or we're also heading into that dangerous time of year from a vol perspective in terms of just the complete and utter malaise of volatility, July and August. Not a lot goes on then. So you think earnings will be enough to really budge us out of the doldrums, or are we kind of just stuck here?
Well, I think if we start to see some decent bank earnings and maybe one or two decent tech earnings, that might put the kill in vol and maybe justify some of the 2,400 SPX equity prices that we have. Last week, there was North Korea launched a missile, and then I think also look at the. We're not getting a whole lot of action out of Congress. Isn't that surprising? They all get paid to hang out, drink cocktails, and really not get a whole lot done. So, that actually was given a boost to biotech, the IBB, XBI, and all of a sudden that's kind of all flagged and lagged a little bit. So, I find it, at this point, I think we need some catalyst, and we need some more good news to keep us going, and I don't know. I just don't see it yet. The only thing that crossed the radar that was slightly interesting, I don't know if it gave banks a boost, but the Europeans bailed out Bank Monte Paschi. I don't even know if I pronounced that right, but it's one of the bigger, a decent-sized bank in Italy. And again, it's, like, okay, we're going to keep just bailing these things out. We're going to bail them out. I guess short-term, that kind of fixes things, but I don't think it's it has never been a great recipe for the long term. If 2008 and 1991, the first bank crisis that we can remember, is any guide.
Who can remember so far back into antiquity, sir? Our memories are much more fleeting, much more short-term than that. Speaking of short-term, we did see the launch of the much bemoaned, much ballyhooed Apron today. In fact, now that it's live, I should probably add it to my own watch list. Of course, Apron, the options on the struggling stock of Blue Apron Holdings, of the first really to go public of the many meal in a box kit type companies. That seems to be the new rage out there. A bunch of names getting into the space. Blue Apron, the first to go public, and post IPO trend hasn't been too favorable. They're off about 20% from their levels here. Let's just get into it. I was going to save some of their rundown for the odd block, but let's just get to it now, Mr. Rock Lobster, because it was kind of interesting to watch. Not a bad day overall out here in good old Apron. About 2,300 contracts. Not exactly blowing the doors off compared to some other recent IPOs like Snap and others in their first days. And it was mostly calls throughout the day. It evened up a little bit more towards the end of the day. Throughout most of the day, it was over 4-to-1 calls to puts. End of the day, about 3.4-to-1. So puts had a little bit of life. That may surprise some of you out there, some of you diehard bears out there in Apron who have been responding to our polls and others saying they won't touch this thing with a 10-foot pole. If they do, they buy the puts. So far, from the options volume perspective, it was pretty much calls and mostly bullish call activity that was lighting it up. The biggest, most active strike of the week, of the day, I should say, really, were the AUG 8s. We saw two big blocks going up there, 300 and almost 300, 290, one for buy-in for 35 cents, the other chasing for 50 cents. So gobbling up 600 for prices in that 35 to 50 cent range. So there are bulls out there loading up. In fact, we asked our question a week about that very same option. We'll get to that in a little bit when we get your feedback and your questions in the mail block. Also, not to be outdone, it wasn't all call buy-in. There was some overwriting going on too. The OCT10s seemed to be a good choice for that one. We saw about 225 going up. Paper blasting those out for about 40 cents. So a little bit of overwriting going there too. If it gets back to IPO level, they're going to take their 40 cents and run. We shall see. Interesting stuff. Mr. Rock Lobster, I know your people in the chat, they tend to like themselves some of these, these funkier names. They also tend to be on the more bleeding edge when it comes to trading options. Were any of them interested in this one? Did you guys talk about it in the old pit chat?
Apron didn't come by, but I keep looking at this company and I keep thinking, okay, delivering food. Where did I last hear of delivering food? And I kept thinking of Webvan. I don't know why. Do you remember Webvan?
They're like a Peapod, right?
Yeah, it was like the precursor to Peapod. I think Peapod might still be around. I think it got bought by somebody. But I guess there's money to be made in this delivering food to people business. It just looks like one of these things that are just going to sit and languish forever, and then all of a sudden it might get interesting. So we did not look at Apron at all, mostly just because it's a little too new for us. But I would, obviously I want any business to try to succeed and hope they do well, but it's just one of those. It's just got the ring of Webvan about it to me. I don't, I guess. I don't know how you can make money doing this. They're going to service the top 10 cities or something and deliver food. I don't know. It just seems like a tall order to actually make money on all that.
I don't remember Webvan so much. I do remember Peapod. Obviously, they're still around, so they're easy to remember. They're in our building pretty much every other day. I see those Peapod trucks going around. So at least down here in a major metropolitan area like Chicago, Peapod's still alive and well. Webvan, not so much. I think they were more of like a general kind of delivery. I think they'd bring a bunch of stuff to you, not just food, as I recall. But maybe they went the way of Pets.com. We'll have to go check. Maybe someone listening is familiar with the history and perhaps the demise or lack thereof of Webvan, names that are out there, retailers that are lighting up. We talked earlier about Amazon, their forthcoming Prime Day. If you're a Prime member, you're familiar with this. Of course, you've been seeing all the ads for it. They've also kind of kicked off this whole new, in a time when everyone's wringing their hands saying, oh, woe is retail. Retail is dead. Amazon making July a typically dead time of year hot again for retail. Walmart following suit. I'm sure Best Buy and others will all have their own deals. Everyone's jumping into the fray of offering deals in July, and people liking themselves some Amazon today. Not enough to budge past the ADV, though, which is kind of surprising. I thought for sure we'd see a little bit of pop, just given how much resonance Prime Day seems to have, how it seems to be everywhere. You can get the deals on your Alexa now, and just about every device known to man. They average about 130,000 contracts, only do about 115 today, so not exactly lighting it up. And pretty much even slightly calls over puts, 1.3 to 1 calls over puts. I thought we'd see a little bit more action out there to parse, but surprisingly, not so much. Maybe it's one of these, not even buy the rumor, kind of wait for the rumor and then sell the fact after the fact, waiting for the numbers to come out, see how it does. Mr. Rocklops, you guys like to walk your Amazon, pretty active one out there, and I know in the old pit chat, you guys slinging any Amazon today ahead of the big Prime sale? Are you just kind of greasing up and getting your mouse finger ready for the deals in a little bit?
Well, we had a butterfly on in our little strategy letter idea that we closed most of them today on the huge rally. So it was underwater a little bit, but not after today. So we took our dollars and split on most of the trade. As far as Amazon, it's been having a hard time around this 1,000 level. It's almost I think it's remember when Apple, it was 700, 700's the number, 700's the number, pre-split Apple. And then it got there and it just never, it took 2 years to get back up there again. I don't know if Amazon's going to do that because for whatever reason, they just keep spinning the story over and over and over again that the whole world is going to use Amazon as a retailer. And as of right now, it looks like they're true. So I think Amazon always gets to that point where it just between every earnings cycle, it just gets quiet all of a sudden. And then all of a sudden we get a little more, and then everybody realizes, oh, all the other retailers are struggling, but Amazon is not. So I think that's kind of where we're stuck right now in that, Amazon's got to show everybody something now to kind of push over this $1,000 mark.
Keeps flirting with that level. Can't really seem to surpass it. Let's see, where do we close today? 996 half, so not quite today. Because Prime Day, not enough, even with a nearly 2% rally. Not enough to keep us, get us past over that much watched 1,000 level. Speaking of things that are watched, people have been talking a lot about 2017 being the resurgence of open outcry, Mr. Rocklops. A resurgence of the options trading floor. Of course, we had the folks at NASDAQ on a few months ago when they relaunched their Philly exchange. CBOE getting some new coats of paint down there, trying to gussy that up a little bit. Even as the CME is getting out of the floor trading business, the options exchanges seem to be getting back in. And we've been talking for a while about BOX, Boston Options Exchange, which confusingly is headquartered and based out of Chicago, planning to launch their next version of that in the old Board of Trade building over here. Surprisingly, this is, a little controversial, shall we say. People are always saying, and already saying, enough's enough. We got 15, 16 exchanges out there. Do we really need another variation, let alone an open outcry version? Their proposal to the SEC getting a lot of, shall we say, critical commentary. Not surprisingly, a lot of it coming from, shall we say, pre-existing stakeholders in the open outcry game. So CBOE, not a fan of it. They, of course, have a trading floor. NYSE, they have Amex, a trading floor. Not a big fan of BOX coming into the fray either. And, of course, NASDAQ, the aforementioned NASDAQ. They own Philly. Also not a fan of open outcry. A new player in that space. Go figure. They don't want to share that paper with a new player. Even some trading firms, our old friend Steve Crutchfield is over there at CTC now, used to be at NYSE, coming out saying they don't want this just because I think a lot of floors, trading firms don't want, that CTC and others don't want to staff up for another floor. It's a big hassle if you've ever gone through it, listeners, having guys coming down to the floor, getting the old jackets made and all that other fun stuff. Maybe they don't want to go through that hassle. And there's also some concerns about opening the floor. I don't know why they would do this, but they're concerned that BOX is going to open the floor before they have the market makers lined up and ready to go, which would seem to be kind of silly. I don't know who's going to maintain the quotes then if there's no one doing that. They seem to be a lot of concern about that. Kevin Kennedy over there at NASDAQ saying having empty room would be completely contrary to the spirit of the trading floor. I guess I agree with that. If they do end up opening an empty room, that'd be kind of silly. But getting away from that for a second and from some of the competitive back and forth in the space, what are your thoughts, Mr. Rock Lobster, on the notion of a new market-making outcry entity really really entering the space in 2017, and not like a gussied up revamp like the Philly was. Philly already existed. They kind of gave it a new coat of paint. But this is a completely new entrance. What do you think about that? Are you going to get your old trading jacket out and move back from the paradise of Maine to dive into the box floor?
Yeah, and I was just in Chicago a couple of weeks ago, and the CBOE not only has one, but it has two trading floors. They have a whole second floor above the main floor, all ready and raring to go for floor trading. And when I looked, it looks like about 3/4 of floor number one is empty. So they're actually slowly taking down posts and replacing it with little street signs for different departments in the CBOE. So while the exchange itself is probably growing, the floor trading business, ultimately I think it's a crossing exchange where the box just wants to try to get in on some of the larger paper and the prints that go up. I think a lot of that, a ton of it goes up on the CBOE, a ton of it goes on the PSE floor, a ton of it goes up in Philly, and that's where it goes. And to try to be viable, they want some of that, and I think maybe we're coming to the point where if they're desperate enough to try to want to open up a trading floor with traders on it, that maybe could be the start of some consolidation in all these floors. I remember the box was the one right after the ISE electronic floor. So maybe it's, everybody's realizing, wow, maybe 16 trading floors is too many, or however many we have now. And the fact that I would view this more as, you don't set up a trading floor at this point these days unless you need the revenue. I don't know how much the box is making, but as one of the smaller floors that never caught on, I don't see, it's hard for them to compete. And at the same time, the fact that the CBOE and the PCX and the Philly have trading floors, that gives them a little more flexibility because you can still quote things when the market goes nutty. You can still quote something. Sometimes, in an electronic marketplace, those quotes can get kind of wide when things are going crazy. So it's always nice to get a quote for something, which everybody kind of forgets. They forget about it now when VIX is just above 11, but they don't forget it when VIX is 32 or something. So, and when the markets are just insane. So is it that the box needs to compete? I think yes. I think they want to do it. They need to compete. Do I want to put on a trading jacket and just try to get in on 5,000 lot crosses all day? I'm not sure that is not a tremendous amount of fun for me at this point, I have to say, because usually that order flow is, they have it, it's kind of matched. They just need to put it up somewhere, and they want all the locals to get out of the way anyway. So I think you're going to have a hard time with that.
Are you saying standing there and watching people cross 5,000 lots on your bid and on your offer is not a fun time? What's wrong with you, sir? You wouldn't uproot your family from Maine to Chicago to participate in the scraps of such order flow? So, you get 10. 4,990 for me.
You get 18.
10 for you.
The crowd gets 50. All four of you. There you go.
Yeah, there you go. There you go.
13, 13, 12, 12. Done. All right.
Done. You're out.
40.
I put up 4,950 for me. Yes. Yes, some insight into what it was like to be a market maker, and still is in some cases to this day. All right, let's keep on rolling. It's time for us to break down the action, the weird action in the world of options. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That tune means it's time for the Odd Block, the funkier portion, not just the Rock Lobster. He's pretty funky in and of himself, but this is where the story really gets funky into some of the weird, the wild, the whimsical head-scratching paper that lights it up. Speaking of head-scratching, you guys asking us, are people still lighting up these crazy Tesla catastrophe puts? Short answer, yep, they are. 421 more of these Jan 2019 50 puts in Tesla lighting it up today, bringing that open interest to a grand total of 28,000 466. And for those of you who are saying, I like my catastrophe a little more catastrophic, well, then the Jan 2018 20 puts, yes, the 20 strike, also active today. 5-lot going up, 10,613. So we keep talking about these. Actually, looks like a 5-lot spread might have gone up. 25-20 put spread, Mr. Rock Lobster. Price it up. I dare you. See if you can handle the massive Greeks involved in that trade mentally. No calculator allowed. But yeah, funky stuff still going up out there. I leave it to you guys to make your analysis as to why these things continue to print and do so in such size, particularly those 50 puts. They do a couple hundred a day. But c'est la vie, crazy stuff. Let's move on to, we mentioned Apron. They had an interesting day today, kind of maybe a little lighter than some people thought. Some calls, really lighten it up. We're going to get to your questions and your thoughts about those April AUG 8 calls in particular. I'm curious to get your thoughts on those AUG 8 calls. Mr. Rock Lobster, when we put that question up a little while ago, stock was $8.15. AUG 8 calls, 65 cents at 75. I'll let you mull over for a little while, Mr. Rock Lobster, what you would do with those calls while we roll on into some other funky paper we saw today. There was some pretty funky. I'm not sure if you caught this one, Mr. Rock Lobster. L Brands, one of our personal favorites. Love this one. Talk about it all the time. Actually, I do believe it is a newcomer to the odd block. They are a specialty retail business focused on women's intimate and other apparel. So there you go. They have a few. They actually own Victoria's Secret. So there you go. So you like your intimates. They got you covered. This is the name that closed today, $44.15, off about $1 or about 2% on the day. It's not a great name for them. Puts leading the charge to the downside, almost 7-1 puts over calls. This name's averaging about 7,000 contracts a day. Today doing about 50,000 and change. And surprisingly, those, including a lot of puts, like we mentioned earlier, and a lot of puts. It seemed, Mr. Rock Lobster, I'd be curious to get your thoughts too, if there was a lot of rolling, with the exception of perhaps some front month. July 42 half puts also traded about 6,000 times. But what really caught our eye looked like a pretty sizable, maybe close and roll, closing out maybe a bit of a funky put tree, call it what you will. What caught our eye out here starting off the day, it looked like at first just straight up AUG Nov 40 put spread going up 10,000 by 13,000 times. Paper trading the AUGs for about $1.10. Looks like they were probably selling the one up close to mid-market. Then looks like they were buying, lifting offers on the Nov 40 puts for $270. The open interest on the 40 puts in AUG was 21,000. So it looks like probably closing and rolling. No real open interest to speak of in the Nov, so clearly opening, but also some other paper going up, just kind of a stream of puts going on. Maybe someone trying to get short some deltas here as the stock fell out of bed 2% today. Also, paper lifting offers, buying the AUG 45 puts for $3.30. Size open interest there as well, about 13,000 contracts. And also trading 2,000 of the AUG 47 half puts for $5 and half a cent on splits almost, or a little bit less. 6,500 contracts open there. So it seems like someone perhaps had the presence of mind to pick up some downside hedges, which are now fairly well in the money, and deciding to roll them out to perhaps a little more cost-effective out of the money strike out there in Nov. Again, the July paper also kind of interesting. Or it could have been someone just decided, Mr. Rock Lobster, some algo said, we got to get short ourselves some intimate apparel names, and we want to get short deltas in LB, and we're just going to pick up every put we can. It doesn't seem that way on the AUG 40s, though. It does seem like they were more on the selling kind there. Looking here at the year that's been out here in good old LB. I don't know if you have these stores in Maine, Mr. Rock Lobster. They're not LL Bean. Don't get them confused. This name was riding high about a year ago in August. They were trading nearly $80. Kind of taking it on the chin since then, down almost 50% from those highs. Like we said, closing today, $44.15. So you might be inclined to see why someone would have some puts in their back pocket and why they would be inclined perhaps to roll them to continue that protection. Mr. Rock Lobster, I know you're kind of on the fly here. This is a funky one. What are your thoughts here on this sizable just put palooza here in good old LB?
So I was very surprised you've never heard of Victoria's Secrets before. I just thought that would be something you might just in passing have heard of.
I've heard of them, the mothership brand, that kind of the basket holding company that holds them all. I'm not familiar with my ladies. The
limited apparel brands, yes. The limited.
Oh, that is limited. That's true. That's right. They kind of have changed it to that.
I only know because Sebastian's wife, she kind of put the sell on this thing a while ago, and she's been right. So I'm going with that, thinking, there looks like some a little bit of climbing into this thing and not liking what anybody's seeing, to be honest. So I have a feeling it just looks like, or it could be just a massive protective type put buying, the way it looks like as I see this, because that you look at that Nov August 40, it's feeling like it's almost kind of a bit of a protective spread somehow, but because of the ratio. And I'm not quite sure, what they've sold, because they sold many contracts ahead. Closing, it looks like some of the stuff could be closed for parity. Let's see, 5, 2.5. It's kind of what I'm feeling like on some of this. So there's a little bit of closing and then rolling out. But it's the pricing, again, I find it's weird because it almost looks like everything is buying. So it's a hard, none of that paper actually makes, it doesn't really make sense to me, to be honest. Just because of just the way it's set up, because there's a lot of open interest. So you're buying to close some, and then you're buying more NOV. So that's why it's a little odd to me. My nose would say that I think they bought to close some of the August, and then they just rolled to the lower strike in NOV and just went all in on the 40 strike line in the sand.
That's kind of the way I was feeling on it too. You're right, it is funky, hence its inclusion in the odd block. It is one of the funkier ones. We saw this one starting to go up, look like a straightforward, OG-NOV 40 put spread. Then you start seeing all the other myriad legs associated with it, and you're like, oh, something more is afoot out here. But it does have the feel of kind of consolidating, except for the July. The July is funky because that's opening too. 6,000 contracts in July. Why you'd be closing an AUG, rolling to NOV, and then also opening in July. That's why it made me think maybe there is someone just out there going after some deltas in this name and getting it wherever he can. But yeah, I'm kind of inclined to go for the closing AUG, rolling out to NOV. Let us know your thoughts on this funky put tree roll to put spread time frame, whatever you want to call it, palooza out here. Funky one, appropriate for the old odd block today. Let's see if we can give you a more straightforward one, Mr. Rock Lobster, so we don't terrify you quite as much. Let's go on to another name, GPS. Bad thing Sebastian isn't here today, because our association with him has made both of us, you probably much more, obviously, because you knowing the L brands, far more knowledgeable of these ladies' clothing brands than probably either of us should be. Would you agree?
He would definitely be. And again, I'm not saying anything because he knows this, but yes, I think he is a little bit more knowledgeable on the ladies' brands.
The man loves two things. He loves Darden restaurants, and he loves ladies' clothiers. That's like two things. Surprised it's not what you guys trade in Carmen line to sling in some Gap and some L brands and some Darden restaurants, and you'd be happy campers. Let's move on to Gap. Ticker symbol GPS, because why the heck not? Why wouldn't it just be Gap? Let's go GPS instead. They should fight for that ticker. That'd be much more appropriate. This name closing today off another bad day out here for Gapland, off over 6%, about $1, almost $1.50. Closing 21 and about 21 and a quarter or so out here today. It's a name that does about 10,000 contracts a day, so fairly active from an odd block perspective. And today doing about 52,000, so over 5x that today. About 5-to-1 puts over calls, showing you pretty much where the action was. And the lion's share of that action, Mr. Rock Lobster, came on a pretty funky strike. We saw a lot of action pretty much across the board out here in GPS today, but a lot of it seemed to come on these front month puts. We saw the July 21 puts going up in blocks, expiring this Friday. July, expiring on the 14th here. So people, it looks like they started coming in and just blasting out just smaller blocks. I mean, decent size, but not 10,000, more like 400. I think the largest one we saw going up was about 1,200 contracts. So not exactly huge size, but decent enough to at least merit some attention. This actually might have, some of it with some of the, I think they were just blasting out and the market kept moving as a result. So it might have looked initially like it would have been one of your funky cage matches, but actually did seem like this was primarily paper blasting away, drawing a nice aggressive line in the 11s handle. Also worth noting that we did see some action in the 21 puts in the straight up July as well, expiring on the 21st. About 11,000 going up there as well. Both of these pretty much opening, no open interest to speak of. Doesn't seem like that was a bit of a time spread. They'll have to dig in a little bit more to see that. Doesn't seem to be going up at similar time codes. But again, funky size, smaller lots, 400 or so, one large one about 1,200, all primarily focused on just blasting away. Drawn an aggressive line on this 21 strike, which, given where it closed today, is a fairly aggressive line, if that's exactly what they're up to. Looking at the year that's been out here in good old GPS, it's kind of been hovering around these levels. Had a brief flirtation back in November with the 30 handle and kind of gave up the ghost shortly thereafter. Got down to about 25 again a week or two after, and it's kind of been flirting with this 25 to about here now being the low, about 21 and change. This is pretty much the low. It was hovering right around 22, high 21. So this is definitely on the lower end of the 1 year spectrum. And it looks like someone, Mr. Rock Lobster, if this paper is to be believed, feeling like there is perhaps a line to be drawn here. Do you concur with this, sir? You think maybe there's a nice time spread going up? What's your feeling on all this put palooza here in Gap?
You know, I'm thinking this is just an Amazon. Everybody's freaking out, right? Amazon's the king. King. And then you have Amazon Prime Day. And I'm thinking maybe people are doing the line in the sand trade. Where they think, you know what, this will be kind of the short-term bottom, and then we'll bounce off here, and I'll just take those puts. And if not, I will just take the stock, and I will wheel my way into happiness. That is kind of what it's feeling like right now with this. Kind of a cheapy price for Gap, I have to admit. Like, can you buy the stuff at Gap and Amazon?
That's probably the next big announcement. Amazon's picking them up too. And you can buy all that stuff on Amazon, which would kind of obviate the need for their online retail arm, but c'est la vie. Maybe they want to go that route. Maybe they want to go the Whole Foods / Washington Post route and join the ever-growing Amazon empire. Speaking of ever-growing, your mail is always growing. Your questions, your comments, your insights. So let's get to some of it. It's Monday. It means it's time to open up the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you know the drill. Monday, it's time to bust out your questions, your comments, your insights, your pearls of wisdom. We also like to ask you guys, get your thoughts on some hot topics in the world of options. We asked them last week, Mr. Rock Lobster. We said, well, I think we told you before, the results of our going long. That was, people actually, surprisingly, people like to buy calls and call spreads to get long exposure to underlying. They don't like the funkier short puts or futures stock replacement, anything along those lines, bullish risk reversal. They like the straightforward buying calls / call spreads, 56% go in that route. We also asked you guys last week, given we didn't know at the time that Blue Apron was going to be listed so quickly. Turns out it's going to be listed today, actually, which was kind of interesting. But we asked you last week, we said, hey, Blue Apron at that point was down only 10% from its IPO, and we said, let's just assume the options were live, and we gave you some nice, silly theoretical prices, easy to wrap your head around, $1, all the way out to D's. What trade would you make? Would you buy, the D's 10 call for $1? Would you buy the D's 9 put for $1? Sell the D's 10 call for $1, or you're not going to touch Apron. About 46% coming in saying not going to touch it. 27% saying you want to buy that put, which worked out. I think Mark joked on the show last week that by the time Friday came around, that put was actually worth. The stock was trading well shy of that strike. So that put was actually a good trade. A buck was below parity, and you had only 11% saying you wanted to sell that call. 16%, only 16% buying the call, which kind of is surprising given what we saw for today's paper. Which kind of brings us to this week's question of the week. We asked you guys, hey, surprisingly, that CBOE got the contracts listed. They're pretty responsive these days in terms of seeing what people want, getting those contracts out there. So we said, even though almost half of you said you weren't going to trade Apron, that said, it is listed right now. It is live. And people are lighting up these calls. In particular, the AUG8 calls. They were topping the charts. So when we posted this, I don't know, about an hour or so ago, we said the stock was right around 8.15. The AUG8 calls were 65 cents to 75 cents. Makes our D's 10 call seem pretty cheap for $1. What would you rather do with that stock, with that option trading 65 cents at 75 cents? Would you want to buy that thing for 75 cents? Would you want to sell that AUG8 call for 65 cents? Would you rather just say the heck with it and buy the stock? It's kind of cheap for $8.15. or are you more inclined to eat the food from Apron than trade it? Mr. Rock Lobster, what are your thoughts, and what do you think is winning our poll here in the early days?
I'm thinking. I just thought I like buying the 9 puts. I thought that was a good idea. But since it's already trading, where is it trading? Like $7 or something like that. Oh, $8. It
was $8.15 when we posted it.
So what are people thinking? I think they kind of want to stay away from the Blue Apron. It's a little. How many people want to touch an IPO that's down 20% from the first day? It's got. Remember those Facebook days when everybody thought that was going to zero?
Yeah, we had all those dire questions. Should I sell? Like, what was it? Like the 19 puts and stuff? Is that too risky? All that stuff. It seems so quaint in hindsight.
It does. I remember that. I remember with our clients in the pit in our chat room with a Facebook. I'm going. The volatility is 30 and it was 42%. Facebook was a $19 stock. I go, it will never get cheaper than this. And of course, then the stock went on a huge run. So we were doing 1-by-2 ratio call spreads, buy 2, sell 1 at the time. And they just kept exploding and exploding and exploding. We'd unwind them and we put on another one and unwind it. Just like it was like the gift that kept on giving. However, I do not think Blue Apron is like that. But I'm looking at the volatility, and it looks kind of it doesn't look overpriced or underpriced. It looks kind of meh as far as that goes. But we'll see what did all the people say? Do they want to hold on to those apron strings or not?
Let's see. So far it's only been up for I think about an hour. We got all week to get your hooks in there, listeners. It's a tie. 33% want to buy the Augate call for 75 cents, and 33% want to sell the Augate call for 65 cents. I guess that's what makes the market, huh? And then about a quarter say they'd rather eat the food, and only 11%. Surprisingly, only 11% that they don't want to buy the stock here. So interesting stuff all around. We got a week here for that one to start paying off for us. We shall see how it pays off. Speaking of paying off really quickly, we'd asked you last week, too, ahead of our TWIFO show, really quick flash poll. We got noticed at the end of last week that effectively the first Bitcoin options exchange was approved. We asked you guys, are you excited to finally start trading some Bitcoin options? We gave you the choices of, heck yes, bring them on, won't touch them, I'm sick of Bitcoin, or I want to buy some puts. And about 70% came in totally saying you want to trade some options. Heck yes, saying 35%, and the other 35% saying you want to buy some puts. So I guess about 70% of you want to trade some Bitcoin options. We'll see if that comes to fruition. I think the participation of the MyAx boys in the venture rounds for that firm that got approved for the CEF for Bitcoin options gives me a little bit more hope we might actually see something out of it, which is kind of interesting, but we'll see. Time will tell. Here's a weird one, Mr. Rock Lobster, coming in from Tomlin. He says, he asked this, he must have seen this on like on a trade platform somewhere. He says, what the heck does stopped IM mean? He's, I believe, referring to like one of those conditional trade tags that we've talked about before. If you have questions about these in general, listeners, I encourage you to head on over to the Options Insider and just search for trade tags. We did a whole couple of, actually, Rock Lobster wrote up a whole couple of articles about it that are there. You can find those. Just search for trade tags and our site or his name, whatever, you'll find it. You can also find, we did a show on it, I believe, on our Options Bootcamp program. So if you are inclined to get that delivered directly into your ear holes, we have a whole 1 hour program episode just about all those trade tags and how confusing they can be. That said, this stopped IM was kind of a new one for me. I had to go dig around a little bit. Over there on the IB site, they had this, they called it stopped IM. They said it stands for a transaction where the execution of an order was stopped at a price that did not constitute a trade through on another market at the time of the stop. A process like a normal transaction, except don't update last. So there you go. That's what the folks at IB have to say about that. Have you come across that trade tag before, Mr. Rock Lobster?
Yeah, I have. It's one of those weird trade tags where it just looks like an exchange wants an excuse to put up a lot of volume on their floor. So they throw that tag up. And usually the stopped IM tags are pretty good size if you see them. Every once in a while I'll see them like, wow. So yeah, that's what I just thought it was basically they put up a whole volume at a price, and the fact that you can actually theoretically trade through. So what happens is it trips the stop and then it trades. So sometimes just because it trips a stop, as you know, it doesn't all trade at that price. So the order was started on one floor, and I guess the rule's saying it's got to finish trading on that floor. So usually I see that as a pretty big size and kind of usually it's kind of a bit of a capitulation for, any order that gets stopped out is usually never very good. So, but yes, I have seen them, and I've actually reported them as such on my unusual activity.
It is funny when you start getting into the minutia of how many different variations and flavors of stopped orders there are out there. It does kind of make your head spin. The various ways, given the nuances and the fee and the rebates and the structures and all the different pricing models that are out there, the different trades that can come up as a result and conditions. It can be kind of mind-boggling. Again, check out I'm not sure if this one was in our rundown. Maybe we need to amend it and add it to that. But check it out if you want kind of the greatest hits of the ones you're going to see the most often. They're in that article and in that 1 hour breakdown we have there for you on the old Options Bootcamp show. Check it out if you are so inclined. We got what else we got here? This comes from PBiggers. I like the handle. I've heard that before. I think he's been in our chat a few times. PBiggers. He puts a link to Costco. He says he looks like he had some problems getting filled. We haven't talked Costco in a while. They're of course kind of been taking the drubbing like a lot of the retailers and the grocery kind of chains have been post Amazon Whole Foods announcement. They're all kind of getting lumped in there. I think we did actually mention a couple weeks ago on the show how we maybe thought Costco was a wee bit overdone. They're kind of on their own little island with this kind of stuff, but it seems like the market is kind of lumping them in with the Krogers and the others who are getting smashed post to Amazon Whole Foods deal, even though that deal isn't finalized by a long shot. He wrote in and said, Costco, he said he couldn't get filled to close, and then this happens, and he includes a chart. He says, I need a bounce next week, and a sad face. And he was working something here. The price was around $154.60. Costco obviously taking on the chin again today, off about 2% or $3, closing $151 even today. So clearly he was working something. He doesn't say exactly what he was looking to buy here. I'm guessing he was looking to buy some calls, and didn't work out in his favor. I feel for you there, Mr. PBiggers. We've all been there. Maybe we get a little greedy, maybe we get a little aggressive with our stop, or maybe we're just working a level we want, and then something like this comes out and slaps it against you. Hopefully it turns around. Have you guys been looking at Costco at all? Or I'm sure you guys looking at the retailers, because I know Sebastian can't get enough of them over there. So you're probably looking at them in your pit chat. Have you looked at Costco at all?
Yes, Costco, Walmart, all of them. I actually nibbled just a little bit in Costco, and that was right now is $10 higher. So I haven't added anything yet. I've been waiting for it to see how it kind of spills out. I think I'm looking at selling some puts in a little bit. So the Walmart was right at this level, so the Walmart's okay, but the Costco hasn't worked out too well yet. I think that this is overdone, but the market can be very long for a while. Or the market can be very upset for a while. So anyway, we'll see how all that goes. But yes, I think we've had some put sellers, put spread sellers and rollers pretty actively in Walmart in our room. For the most part, they've been doing okay. They've just been trying to stay ahead with it and sort of roll with it. So if that is any help at all, but you have to kind of be nimble if it's, you know what I mean?
Yeah, clearly Mr. PBiggers wasn't nimble enough on this one. Hopefully it works out for you. Maybe if you're waiting for a rally in Costco, you might be waiting a while, given the fact that all these food names seem to be getting, the technical term is shellacked. Let's see, I think we got time for one more here. Alfieg wants to know. He sends a link to the most recent Barrons article. It's an interesting article on Barrons. Any truth to this? And the article, you probably saw it, listeners. It's called How to Tame Volatility, Nix the VIX, and Buy CBOE. This is kind of a thing. People have written into us about this before. Obviously, CBOE, a tradable name. They went public a few years ago. Ticker symbol, appropriately enough, CBOE. We've talked about them before. I remember the first day I went public, I think I traded just a 10 lot, just to do it. It felt so meta, having been a CBOE member and all the other things we've seen over the years. To trade options on the CBOE felt like a very meta act, but I haven't really been slinging it ever really since. That said, I have been watching it, and I thought I was one of the ones, maybe I was a naysayer. I thought when I got to 60, it seemed a little, shall we say, aggressively valued, and here we are, 50% or so higher, trading 92 today. So what did I know on those levels? But it's been an interesting narrative. I heard people come out before and kind of argue this, saying, hey, forget about the variations and fluctuations of the VIX. By the mothership, they've been printing contracts on this thing, even in this anemic volatility marketplace. We talked about it on Vol Views last week. Even with June being very quiet from a VIX perspective, they put up record numbers for VIX futures again. So it's good business to be in these days, even when there is no vol to be found. So maybe there is something to this, the old buy the VIX. That said, like most things in the market, this is looking pretty top heavy. They did just announce an enormous acquisition with the Bats deal. Stock didn't really take much of a hit on that, which is kind of interesting. Usually see a little bit of a sell-off post-acquisition. Like, pretty much been rally-ho ever since. So maybe you could think it's a little overvalued here, or maybe like Steve does in the article, maybe you think it's time to pick it up. Mr. Rock Lobster, what's your thoughts on saying, the heck with the whole volatility product space, I'm just going to go buy the mothership instead?
I don't think that's a bad idea, although it's already kind of priced like that. It's not like it's priced super cheap.
Yeah, that's my problem there, too. It's got a little bit of premium in there.
I mean, I know a lot of people that work at the CBOE. The CBOE over the years has always been good to me. I'm glad the stock's doing well, but it's not like it's not super cheap anymore. It's like $33 or whatever it went public at. So I guess the only thing I regret is I should have bought a CBOE seat instead of a Pico seat. But
yeah, you screwed the pooch there, sir.
C'est la vie.
That's still, I think people always talk about, like the tech gold rush of the 90s and everything like that. People just don't even, they gloss over buying like a CBOE seat or a few other exchange seats, particularly CBOE, was just such a gold mine investment. Not only did you make a ton of money at the end with the sale, but the appreciation along the way, the thing got up worth, you could have bought it for like, 10, 15 grand back in the day, sold it for many orders of magnitude more than that. And towards the end, you could lease it out for 15 grand a month. You're getting paid every month what you paid for the thing. It was fantastic.
Yep. No, it was. Even the PSE seat ended up doing okay, but the CBOE seat probably from a value point of view, maybe I guess CME seat's the only one on a par with it that really lit it up in a big way.
You guys on the Picos, you had that burrito premium because you could eat burritos on the floor. We couldn't do that, so. That's why yours was a juicier, quite literally, trade than the CBOE. All right, keep those questions coming. We'd love to hear from you guys. Now we got to keep on rolling. Into our final segment, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. These are my favorite Around the Blocks to do because we're getting back into earnings season. We don't have to talk as much about crazy macro things and what's Trump going to do here and what's that going to do here and what's this nut job with his finger on the button going to do in North Korea. Obviously, it's still resonant, but we get to talk about concrete things like earnings. And we got some coming up. Not a ton this week, except for Friday. We got some actual financial names popping off here after the bell. We got Thursday, got Delta Airlines for all you trading that guy. Friday. We've got good old Citi as well as JP Morgan and Wells Fargo. So they're popping off this week. So we're starting to get into the teeth of it a little bit, Mr. Rock Lobster. Any names that you're really fixating on, can't wait for, salivating, aside from Blue Apron, of course?
As far as earnings go, this week, we do have those banks at the end of the week. And I think that's going to set the tone. I have to be honest. We're looking at, I believe, what is it? I don't think it's JPM. It's Bank of America. And is it Bank? And so we've got the 18th is not the end of the week. No, it's got to be JPM and Wells Fargo. I think so on the same day. And they're both on Friday. They're both on Friday before the market opens. So I think that's going to help set I think, the tone for the earnings cycle, because I think the street now needs the banks to start printing some money as opposed to the government printing the money, and see if that actually starts to happen. So I think that's the big one, because in order for us to push higher, we need earnings actually have been pretty darn good over the last year. So we'll see if they can be pretty darn good for another year.
Pshaw, earnings. Spoken like a diehard fundamentalist that you are. You got to see money before the stock market can go higher. What kind of not backwards nonsense is that? If we had listened to people like you, we'd be back in about 800 for the S&P, right? All right. That music means we got to close it out for this another epic journey through the world of options. Even without Uncle Mike, we could fill an hour pretty easy, me and you, Mr. Rock Lobster. 2 gas bags as we are. But before we go, one last time. By the way, Uncle Mike couldn't make it. But, of course, check him out over there. Hit him up, M2SAW at RCMFS.com. If you, too, want to take advantage of his no-ticket charge and all that other fun stuff he's got over there for you. You may even throw in a coupon for whatever the heck Rock Lobster's going on. In fact, I did hear, Mr. Rock Lobster, speaking of what you got going on, I heard a rumor. Maybe you can confirm it for me. I heard a rumor that you're finally going to be doing your juice for free. You're not going to get the book going, but at least the webinar. Is that correct?
We are going to show people how to buy option premium, but have the market pay you some money for that premium. So instead of just going out there and spending all your hard-earned shekels on calls and puts, there are ways to try to get that market to help you pay for those contracts. So Mark and I we're actually on the webinar. It's got a little more benign title, but on Option Insider Radio, it is Get Your Juice for Free. So
I think I've written at least 2 chapters of that book for you already on the show. I've given you at least couple of titles. I give you that title. I think I've written just virtually a couple of chapters from that book for you. Right? You should have it ready to go. Just slap the binder on it, send it off to the publisher, and you're good to go, sir.
Well, I hope so. I just need some time to write.
Just use voice transcription. It'll be perfect. What could possibly go wrong with that, sir? If you're interested in that, check out The Rock. He's been talking about it for so long. Finally, go check it out. How to get your juice for free. The man doesn't like to buy anything. He's very cheap, including the lobster out there in Maine. So if anyone could guide you to some deals in the options market and how to pay for these things and get paid to do it, he could do it. Head on over to optionpit.com to learn more. And on behalf of The Rock Lobster and Uncle Mike and indeed myself, thank all of you out there in the listening audience, downloading, streaming, all that fun stuff. We love you all, and we'll see you on Thursday for more The Option.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.